Well, hello, traders and investors. I'm Ellie Little, and this is your daily NeoTA wrap. We take a look at these markets. We're doing it from a neoclassical perspective, looking at supply and demand on the charts. We're using that information to make wise decisions about when to enter, when to exit, which way to point. That's what you need when you're going to wrap a trading plan around it. You have a powerful instrument. That's what neoclassical is all about. That's what the model is that I built and that I teach. If you want to learn how to trade, if you want to learn how to invest, if you want your money to make money for you, then I suggest you, consider coming to this site and, viewing what's available to you as a visitor. Of course, if you're a member, you can get at all the tools, get at all my comments, get at the education that we offer. If you want to do that and you want to join, there's a 2-for-1. In other words, bring a person with you, split the cost. It's the best way to get involved and to learn how this all works. As far as what these markets did today, it was a little bit of a sell down. You were flat on the S&P, a little bit down on the NDX. Facebook, remember we talked about 3 earnings. We talked about Apple. We said Apple had the best shot of potentially going higher. We talked about Facebook and we talked about Amazon. And we said the latter 2 were probably going to sell down. And that's pretty much what they've done. And we'll look at those charts again. Today you got gold pushes up, looked like it failed. I'll try to weasel that one in here too and look at it. Russell was down slightly, so you kind of had a flat day, but Facebook was unable to hold its gains, and Amazon not only did it not hold its gains, it's going to sell off tomorrow after it was up again today. Let's before we go to that, I want to pop over to the charts. I want to look at the SOX. The SOX has been trying to hold in here on this push. And the reason I'm interested in the SOX is so much of this gain has been associated with the NDX, has been associated with the large cap tech stocks and with the S&P, with the SOX themselves. And so the SOX here is still hanging. It was an over-under today test failure to me, so that one says this one's probably going to try and pull back tomorrow. The other sector that's been able to hold up has been discretionary, and that one's still holding up. Looks about the same as the S&P actually. Healthcare hasn't had a great run for the last year or so, and they're pushing up again. I'm seeing a lot of chatter about, maybe that's the place you ought to be putting your money. I'm not sure I'm convinced of that, but you hear a lot of chatter from a lot of folks. XLK, I'm still doing all right. That one also probably will see some pressure tomorrow. The other big one weighting-wise is financials, and that one is struggling and coming down to test the bottom of the range. Let's pop over to the major indexes here, see what we have in those. So we'll start out with the S&P 500. And what do we got here? Okay, so this one is doing the same thing it's been doing, and that is that it's trying to set up to go lower. And when I say that, what I'm looking at here is I'm looking at this this situation where well, think about it this way: you had a range, right? That range was in effect for a couple months, and then you break out. And what do? You immediately actually come back and you do the retest, regenerate off this low, the swing point highs low. That's part of the model, right? And that's an information source. That's a test. So far, it's held it, but it hasn't been able to get back into this area, right? And if you hang here too long, you are going to try and test the downside again, and it won't take much to break up underneath here, right? And that retest, not only does it not regenerate, but it potentially will then have your ABCD structure to the downside, which will test these lows and try to break them. When you test multiple swing point lows, and if you break, you can get a faster move to the downside. Now this is on one time frame because you don't have that picture over here on the weekly. The weekly's doing just fine, and so it would just be on the daily, and you would get a push down. But that's what you're looking at. That's what you're trying to understand: is what is the market? What kind of clues is the market giving you? And right now the clues are saying, hey, you know, it won't take much more to get a little push to the downside that actually could get one of those little snowballs going and you see a bigger sell-off. Let's see what the NASDAQ looks like. Now, these had pushed up higher, and of course, they're going to be under some pressure tomorrow. There's nothing in the cards here to tell you that tonight on the NASDAQ itself. Let's see what the NDX did. NDX, oh, that's interesting. So the NDX gets over back under a little bit less volume, which says, hey, you can get a pullback. So the NDX actually does look like it's telling you that. Russell, nothing. It's just sitting in a range. And again, this range has been going on for almost 3 months now. Let's pull over and look at those big cap tech stocks. You know, we don't always get it right. You know, but I'll guarantee you one thing: this model works better than most models you'll find. And as long as you're, you know, consistent with how you use the model, you'll get a good read. Okay, so we had a question last night about Apple. You got an inside day on Apple here, so that's not bad. I mean, that's actually good. The bad thing is that it's going to probably test this low before it tests the high again, and that's where you're going to get the test. So you don't have enough information yet, you know, to make those decisions, which was the question last night. Facebook. Okay, so what does Facebook do? So Facebook hits the highs, gets over it, has more volume, that's good, but it does a bearish engulfing and closes on the low with a dark candle. That's all bad. Now on the weekly, that's where you really want to look at the volume test, because this was testing a high as well. On the weekly, it's going to have more volume too. Again, that's a good thing. So, you know, Facebook, yeah, it's going to get a setback initially, but, you know, it can come back again. So it's, you know, it gives you enough information to know what you want to do. And the thing you want to do here is you want to let it settle back in some, and then you look for another spot if you want to be long that stock. Okay, Amazon. Amazon goes up. Top was 4384. Doesn't quite test it today. Let's look on the weekly. So the test on the weekly was this breakdown bar, 84309. Test last week with less volume. Test again this week with less volume. And as we saw it after hours, it was trading down around 800, I think. It's going to pull back, and I think it could actually come back down into these big bars again. I would say 791 probably tomorrow at worst, maybe to get into it, but that's probably about the worst you'll see. But after that, you can go reach the bottoms again, 717. So not a place I would be playing if I wanted to be bullish something. There's better trades than that one. What else we got here? Let's look around. Oh, I was talking about gold and silver. Let's go back over and look at that, because I believe those guys actually failed today. So let's look at gold, GLD. Now we're using the ETF. At some point, not too distant future, we'll actually have the commodities up here, and we'll be able to look at them the same way. So you got 6.2, you do 7.1, you get over it, you get back under it, you fell. Price but not volume. It says it can test again, so this one still is going to try one more time. And if we look at GDX actually does get over it, so that price point is 24.34 and it closes over it. You'd love to see that stay up there one more bar, and then that would give you a shot to take out that high. And if we bring this over on a weekly, the swing point low is here. The top is 24.24. You really would like to see it hold over that for a couple bars. And if that were to happen, then that would say, okay, the trend is really finally trying to change again. In other words, we had an uptrend, then we had a downtrend. If we can get over this and stay for a bar or two, you know, a couple bars actually is what you always like to see, then that would tell you, okay, the trend's not this, it's that, right, sideways, and then you look for your retrace somewhere and buy, right, because then you potentially have some upside stuff going again. So you just have to be patient. You got to wait on the trade, and eventually they'll set up. And as long as you're patient, then you don't get caught making bad trades. The worst thing you can do in trading and investing is making bad trades and either, saying, oh, well, that's the way it goes, right? That's not the way it goes. I mean, come on. There is a method to it. You just have to read what the market's telling you. And I know this sounds like gibberish to some. And if you don't know what I'm talking about, well, I understand, because it's a little bit different than anything you've seen before. But it's not rocket science. It's a methodical model of looking at the market and allowing the market supply and demand that you see on the chart and the test of those areas of significance tell you what the market's doing or what the market is trying to do. Folks, the people that make these bars, these big bars you see, they're not me and you. They have millions and millions of dollars they're pouring into this market. And they're not going to do something just willy-nilly. They're making decisions based on fundamentals primarily, but some of them technicals. But, those kind of shops are basically fundamental shops. I sell my services to shops like that. They like to consult the technicals, but that's not what they trade on mostly. They really want to look at the fundamentals. But you know what? The fundamentals show up in the charts, because if that's those guys and they're making decisions to sell, then you and I know it. That's why the technicals work. Tomorrow you got, what do you got? Employment number. I'll be back on Monday next week. I don't know that the employment number means much. You're probably going to have some pressure tomorrow. I think the SOX has already made its run. Not the SOX, but the NDX has already made its run. You're probably going to have some pullback there. And unless some other sectors pick it up, and I don't see those sectors yet on these charts, then this market is going to struggle and try to sell back down. Thanks for joining me. If you really want to join me, if you really want to understand what I'm talking about, if you really want your money to work for you, jot me, right? Come over, come to the About Us, come to my thing here, jot me, email me, what is it, contact us, right? Contact me, let me know. I'll talk to you. I'll show you what I do. I'll show you how the plan works. I'll show you how to get started. And here, at this point in time, I'm taking on new people and teaching them how to get started and making certain that they get started right at the site. Have a great one. Good night.